We were talking a little bit about the economics briefly because we focused quite a lot on politics in the previous block. But are we just going to see a drip of data that is slowly getting worse?
It feels very much that way. You know, this week we've had a manufacturing PMI, a construction PMI, and a services PMI, and they were all weaker than expected. The global manufacturing downturn, the global trade downturn, we know all about. Everything else looks as if it's just. Yesterday I thought it was like the weather, soggy. This morning maybe it's like the weather, cool. But it's just getting slowly worse. There's no momentum to anything.
What happens to pound?
It probably doesn't do anything very much. I mean, in my mind, if you think about the pound trades off Brexit in terms of euro sterling, above 95 on euro sterling is where I think we'll get to on no deal. 85 if we get a deal, 80 if we just cancel Brexit. We're give or take at 90, staring up, staring down, not sure where to go. I think if the economic data weren't getting worse, I would think, come on, we are taking no deal off the table here, aren't we? And we might drift lower. And I think that what the data's doing is it's just preventing any kind of significant rally. The market is very short of sterling, very bearish.
But what's being priced in? I mean, has the no deal risk actually been taken off the table? Not really.
No, I think, because in my mind, we're halfway between no deal and deal in terms of the pricing. So we're still, you know, we're prevaricating, which is probably about the right thing to do. With a perhaps is a what happens kind of thing, and a meh. And bear in mind, you know, that's where we are with a market that has a huge short that you would have thought would start supporting the pound at some point. That I don't know how long.
What needs to happen for the pound to be supported?
I think
if you have a second referendum, that's not pound supportive, is it?
I think if you announced a second referendum, I think all those people who are short would start having to take their positions off just in case. Because if you think the polls will probably say a second referendum's, actually they'll say what they said the first time, 51% likely to say stay in, 49 to stay leave, which is what the last one said, and look what happened. So we would think it was a 50-50 bet, and you want a big bet on that.
What do you do with gilts? I mean, they're a record low, but just like everything else.
Yeah, but I mean, you know, if you've got an economy that's drifting dangerously towards recession, you don't sell bonds. That doesn't seem like the right thing to do. No one ever sold bonds in a recession.
Yeah, but even at negative yields?
Well, I don't get negative yields on 10-year gilts. They're better than
fair.
They're one of the few that I do. So yeah, I would still be long gilts rather than short. It's certainly not shorting them. Bear in mind, you know, and I might be long more the front end. I've got the Bank of England's Monetary Policy Committee talking about no need to do anything. They're going to ease eventually. The economy's slowing.
But how much is it slowing by? So let's say that you know, let's get rid of the no deal scenario. Let's say that we'll have some kind of withdrawal agreement like the Theresa May one. What happens to the economy under that scenario?
I think it just drifts down because Europe's drifting down, the US is drifting down, and just
drift down to recession.
Drift down to something painfully close to recession by the time we're done. Yeah, even on that case, I think that's my fear, is that if you say no deal gives you a recession, you say at this point, just taking a really long time to get some sort of vague sort of deal, we might have got to at least, you know, another quarter of negative growth somewhere out there before we have a deal.